Hi, everyone. Steve Wyett along with Matt Stephani. Matt, another strong week in the markets. Last week, we were up across all of the major indices, international included. We're about 90% of the way through earnings season, and we're, what, 13%? Way better than what we were expecting. But, Matt, what I want you to discuss, what does this do to our outlook for not just the rest of 2025, but looking into 2026? How's this shaping up for us?
Steve, I think that's the most interesting point of what's going on in the market is you continue to see investments into artificial intelligence. You see the big hyperscalers looking like they're going to spend over $400 billion in CapEx in 2026. And so what I think is going to happen is you're going to see estimates for 2026 and 2027 rise as well. And that's what's going to drive multiples on stocks potentially higher. So there is some upside coming from these earnings, even just from the commentary about what companies are investing in for the future. It's also a time of inflation and tariffs, though, Steve. What are you seeing on the tariff and inflation front, especially this week with CPI coming out?
Yeah, so this is look, the employment number that came out a week ago last Friday really changed the outlook on what we think about the strength of the job market. And so, Matt, it would appear that the only thing standing between the Fed and lower interest rates is inflation, and tariffs are playing a part of that. Chair Powell's been pretty consistent in his commentary that it looks like tariffs are going to have an impact on the inflation indices. We don't think that's a long-term deal, but it does put the Fed in a little interesting position where they would be easing with 4.2% unemployment and maybe headline CPI moving from 2.8 to 3 to 3.2. In the end, we think ultimately the Fed will probably look to lower interest rates. The market has moved that direction. I think the market's pricing for the chances of a Fed cut at their September meeting are now over 90%. But those CPI and PPI numbers will play a really important part. And then, Matt, that sets the table for Fed Chair Powell's appearance at the annual Jackson Hole Symposium. We've seen monetary policy shifts announced at that in the past. That could very well be the case again as we get there, watching those inflation numbers closely. So, Matt, as you think short term, now, wait a minute, we're 90% of the way there. The most important stock in the market, NVIDIA, though, reports later on, right? When is NVIDIA's next report?
So I think NVIDIA is about 2 weeks out from reporting, and we'll see what they have to say on demand for AI chips. But I think it's going to be pretty much a knock the cover off the ball type report. Doesn't mean that I'm recommending a stock or not recommending a stock. What I'm saying is that's the economic growth we're pointing to. And I will tell you, Steve, with the inflation data, the other thing I'm thinking about is what happens as the mix of goods to services changes in the US. Goods become more expensive. Maybe we spend more on services. It's just something I'm watching in earnings and looking for as companies report, just something to think about as well.
That's a great point, Matt. I mean, look, you could build a case that if we shifted spending, which is already favor services like 60% services, 40% goods, that could even be potentially more additive to domestic economic growth as we move forward. So all things to consider. Thanks, everybody, for dialing in this morning. We'll look forward to having a chance to talk to you again soon.